Hey, my name's James Nicholson and welcome to my YouTube channel. We've got some inflation data today. It's beat expectations. The analysts were wrong. That's a good thing. And this is really going to give us an indicator on when we can expect the next rate cut from the Bank of England. We've got some updates on that as well. So this is positive news. We've had a lot of comments in the last week. In fact, we've had about 2,000 comments on the channel. So thanks to everyone that takes the time to comment. And a lot of them have been saying, are things going to get worse? Have we got any good news on the horizon? Well, this is a smidge of good news. And I'll tell you one person that is going to be delighted with this news because it's got some pressure off her exactly when she needed it. And that's Rachel Reeves. I'm sure when she woke up and saw this data and saw this was being talked about in the news, she was a little bit more pleased than she was yesterday. So let's talk about what's happening with inflation. What's the likelihood of a rate cut? And what does this mean for your mortgage rate, more importantly? We're going to cover all of that and more. But if you're new around here and you haven't done already, we've had so many subscribers this week, more than 1,000 in a week. We're that close to 35,000 subscribers. Have a look around this video somewhere. Can you help me get there by smashing subscribe if you haven't done already and hit that bell notification? And let's get some more views on this video by smashing like, tickling like, doing something to that like button. That helps with YouTube's algorithm and gets more views on the channel. So thanks to everyone that takes a moment to do that. So inflation data. It wasn't expected to be very good, and inflation has been edging up. It's expected that it will continue to go up over the next few months because energy costs are going to increase, unfortunately. But for now, we'll take any good news while we can get it. It hasn't been a particularly good start to 2025. The budget that Labour did at the end of last year is starting to bite and it's starting to impact the economy. And so the markets haven't been too pleased. But this news, they are slightly happy with. So let's look at the inflation data and where we're at. So the inflation data was expected to come in at 2.6, came in at 2.5%, which is down slightly. That is December's data. So that's good. That's moving in the right direction. Any little win that we can have, great. Anytime the analysts are wrong, good. That's what we need at the moment. And so the inflation data is down. Now, how does this impact mortgage rates? Because yes, inflation's important. You want to go to Tesco's, Waitrose, Marks and Spencer's, Aldi, wherever you shop, and you want it to be cheaper. Of course you do. And so interestingly, food costs are rising slower now. But what does this mean for your mortgage rate? Because if you own a property or even if you rent a property, it's important that rates come down and make things more affordable. Well, the chance of a rate cut in February now have changed dramatically. So the chance of a February rate cut have gone up to 74%. It's moved in the right direction. Temporarily, the markets did price it in this morning at 81%. That's been revised now and it's stabilising at 74%. That's a good sign. That means that there's a high probability that rates will be cut in February. Now, we have 2 rate cuts in us that won't cause too much impact. Remember, the Bank of England, they want to keep rates similar to the Federal Reserve. The Federal Reserve is at 4.25, we're at 4.75. So we could have 2.25% rate cuts without upsetting the markets too much. So we've got that in, and the markets are now saying it's likely that that will happen in February. Now, if the Bank of England disagrees, they will start doing speeches and talk about the likelihood of this prior and give some hints whether they feel the rates are going to be cut or not in February, and the market will adjust. So right now, the markets are saying, yes, that is likely to happen, and it's up from 62%. So what else is going on? What's brought this inflation down? Well, costs at restaurants have dropped. That's good. Hotels have gone down. That was talked about a lot. Tobacco isn't hitting the market so much now. Neither is clothing. And one of the bigger things is airfares. They had a big spike And that really caused the inflation data to go all over the place in the summer, and that's gone down. Now, here's another good one that was in this data that some people have missed. Every time I listen to the Bank of England when they do their rate meeting, they talk about service inflation, and that's been a real worry for them, and that's just getting out of control. Now, it makes sense that service inflation is going to be tough because energy costs are going up. So if you think any service business, you think a hair salon or you think a restaurant, a big cost for them is their energy costs. Another big cost for them is their wages. We've had a minimum wage increase that's going to bite in April. We've also got national insurance that's going up as well. So there's lots of cost on these businesses now, but the service inflation has actually dropped this month. It was at 5%, and it's quite a lofty drop. It's gone down to 4.4%. That is something that the Bank of England are definitely going to pay attention to when they're considering the cuts that they want to do in 2025. So that's good, and that's moved in the right direction because they keep talking about services. If you listen to them, they're constantly saying service inflation is a worry for us, and that big drop will definitely help. Now, one of the things that was highlighted in the inflation data is rent. And rent is running at a crazy rate, and the annual rate of rental increases has slowed down. It was 10 or 11% at one stage, but it's 9% still. And this is running ahead of all inflation. And those costs are some of your biggest costs that you have each month. Now, we've had this week a very popular video on the Renters' Rights Bill. That got voted through that stage of it last night. And this is going to push rents up even more. You see, putting more stuff onto landlords is meaning more landlords are quitting the market. And because they're quitting the market, there's less properties available, and that's increasing rents. And I expect that to continue in 2025, 26 and 27. I think you're going to see some big rental increases. I've got a rental property in Dorking, where I'm based right now, and I had to have a look at it yesterday. There was a leak inside the property in a flat that I've got there. And it was interesting. That property, I know we rent for £1,100. It's a 2-bedroom flat. So I just thought I'd have a look when I got home. How much is the market rate for a 2-bedroom flat in Dorking in Surrey? And it's £1,500. In fact, £1,500, and there's barely any available as well. It just shows that how much rents have gone up, and that is going to impact people. The Renters' Rights Bill going through is going to squeeze more landlords out. And if you look at the data, homelessness is up 25 to 26% over the last 5 years. That's a huge increase. And the number one reason that you're getting more homelessness is landlords taking their property back to sell. Landlords taking their property back to sell. This legislation and all this stuff is going to basically, it's going to increase homelessness even more. So in summary, the inflation has dropped. That's good. That's positive. That's what we want to see. It's expected it's going to go up over the next few months. What does this mean for your mortgage rate? I think that you're not going to see a lot of movement. Even if the Bank of England cut in February, you may get a couple of lenders give a smidge up or a smidge down. But I don't think you're going to see any substantial drops in mortgage rates until the summer at the earliest. Let me know what you think about this inflation data. I know some of you will think that the timing couldn't be more perfect to take some pressure off Rachel Reeves. I'm sure there's a few of you that think that. Do you think this means the Bank of England is likely to cut rates? Do comment below. Do smash like, do subscribe, and check out all the other content on my channel, including this video right here.